A look at the Stanbic Bank financial performance for 2016 may give the impression that the year was not actually a difficult one for business. Unlike other banks in the sector, the bulk of the 191 billion in net profit did not accrue from the traditional banking business.
So when you hear the government saying they're spending 50% of their budget on roads and infrastructure, that's good. It's a good policy. But how does it actually happen? How does a Chinese contractor bid on the Kaiso Road, and how does he get the performance bonds to make that happen? That's where we come in. A lot of these guarantees and bonds are actually written also off Chinese banks. So they will come with a Chinese bank and ask us to localize the guarantee. Very good business and very critical to how this economy is running.
The bank reported revenue of 643 billion shillings, a growth of 21% from 2015. Total deposits above 3 trillion shillings, up 25%. Profit after tax of 191 billion, a growth of 27%. 73 billion shillings in taxes directly paid to the government treasury. That the bank did not make most of its money from lending, as seen in the story of the numbers of private sector growth, which was marginal, implies that banks did not lend, but credit appetite was equally lower.
For a very long time, we saw private sector credit growth in low single digits. That's a number that we've been used to seeing in the 12-13%. But for 2016, that number was 6%. Basically, it didn't grow. If your GDP is growing at 5 and your private sector credit growth is growing at 6, that means there's nothing happening. There's a very, very boring party going on.
The ratio of cost to income, despite the large profit by the bank, was almost 50-50, meaning more money could be made if the bank's cost was lower.
Operating costs went up. That's the one thing you can't control in Uganda. The cost of doing business just keeps going up and up and up. But we're trying to manage. And as a result, we had our operating profit grow from 203 billion to 254 billion, a growth of 25%.
The bank, part of South Africa's Standard Bank and listed on the Uganda Stock Exchange, has announced a dividend of 3.7 shillings for the year.